Imagine opening a trade, watching it head perfectly towards your take profit, and then boom, in less than single second, a giant 100 pip red candle wipes out your entire account. What just happened? You ran into a red folder event on Forex Factory. Most retail traders think economic news is just as boring math for the Wall Street, but the truth is these events are literal fuel that move the market. If you don't know the difference between NFP, CPI and PPI, you are not trading, you are gambling. In the next 4 minutes, I'm going to break down the big three market movers so you never get blind shit again. Let's dive in. First up is the undisputed heavyweight champion of market volatility, NFP or the non-farm payroll. Released on very first Friday of every single month, NFP is showing the jobs that US economy added or lost in the previous month, excluding the farming sector. Why do traders go crazy over this? Because the Federal Reserve watches employment like a hawk. If an FP number comes in a way higher than the forecast, it means the economy is booming, which gives the Fed green light to keep the interest rate high. So I'm sure that you must have heard about the news. I mean, like the last week they had the NFP and unemployment claims and all. So this is what we are talking about. And this is the forex factory where you can see, like, you simply type the forex factory in the Google and you will open this page. So here if you go on the calendar, so you will see the different kind of the macroeconomic data. For example, here it will show you the entire week schedule. Like for example, mostly we see it in terms of USD if you are trading the USD pair. And for example, if you are trading euro or pound or maybe like AUD, then you have to go through that. So there are three types of news. The first one is the red folder, which is NFP, which is PPI, CPI, and this ISM and all. We will discuss about that. And the second one is like the orange, which is the red one is the high impact, the orange one is mid impact, and the yellow one is having impact, but it's like kind of a minor. So here you have to see it here. Like here you can see that on Tuesday there is a orange folder news. Like it's a news from Bank of England governor. Okay, so it will have impact on the GBP pairs. So in that way you have to check, because most of the prop firms they don't allow news trading, or like they have the strict rule about you know that you need to be particular aware of. So that's why you need to know. So we were discussing about the interest rate. The USD dollar shoot up like a rocket. If it misses, prepare for dollar dump. Next, we have the current ruler of the market trends, which is CPI, which is called Consumer Price Index. If NFP tell us about the job, CPI tell about the inflation. It literally measure the change in the cost of basic basket of goods and services. When you hear people complaining that groceries or gas prices are getting more expensive, that is what CPI is tracking. Central bank have one primary mission: keep inflation stable, usually around 2%. If CPI come out hot and higher than forecasted, it means inflation is raising. To fix this, the central bank has to raise the interest rate to cool things down. High interest rate attract foreign investor, which cause their currency to instantly strengthen. Watch out for core CPI too. That is the same report, but it stripe out volatile food and energy costs to show the real underlying trend. When core CPI surprises the market, perfect explosive move on pair like Euro USD or the gold. Now let's talk about CPI sibling that many retail trader completely ignore, which is PPI, Producer Price Index. While CPI measure what consumer paid at the register, PPI measure inflation from the perspective of manufacturer and factories. It track the cost of raw material and wholesome good. Think about it logically. If it cost a factory 10% more to make a shoes today, what are they going to do tomorrow? They are going to pass the cost into the customer. That make PPI a leading indicator for CPI. If PPI is rising, CPI will almost always follow it a few weeks later. Smart trader use PPI day to get an early hit of where the long-term monetary policy is heading. Here is the ultimate forest factory game plan. Every Sunday night, you open your calendar, click the filter button, and check only the red folder. Note down the exact time for NFP, CPI, and PPI for the week. Your goal is not to guess the number like a lottery ticket. Your goal is to know when the storm is coming so you can adjust your risk, tighten your stop loss, and step away entirely. If you want a complete strategy or exactly how to trade the price action just after the news drops, hit that subscribe button, leave a comment below letting me know which news event blows your account the most, and I'll see you in the next video. Trade safe.